Hello, everybody, and welcome back to another episode of Let's Get Financially Fit, the podcast brought to you by the Financial Spot, powered by Liberty Bank. I'm your host, Brooks Benjamin, and today we are discussing home buying and how to buy a home and some down payment dilemmas that you may be facing or you may think that you're facing, because we're going to debunk some myths today. I have with me Ms. Prax Melancon, who is a loan officer here at Liberty Bank. Hello, Prax. How you doing?
Great. Thank you, Brooks, for having me today and helping you address or debug, like you stated, all the myths about down payment and closing cost assistance, how to purchase a home, whether or not I'm ready, is my credit ready? Do I have enough money? What's the best product? So I'm excited to be here.
So to begin, a lot of people think that they need a lot of money to buy a house. They need a big down payment. I need at least 20% down for whatever home I'm trying to buy. So is this true? Do they need 20% down payment?
Absolutely not. It's been I've been in this industry for almost 20 plus years, and we don't need 20% down. We have programs with no money down. We have programs with 3% down. We have programs with 3.5% down. So the idea or the myth that I need 20% down to purchase a home is no longer there. Unfortunately, this was in the initial times when times was a little rough. And yeah, most applicants needed that 20% down payment to be able to qualify for a home. Today, we have products that allow someone to buy a house with little or no money down. Now, you are going to need some money invested in the transaction. I want to make that clear. You can't buy a house without investing some type of money. Mm-hmm. We are going to require to see some investments on your behalf. But when it comes directly in reference to the down payment, we do have products that would allow you to buy without a down payment, because we could combine sources to help you cover that down payment. Mm-hmm.
That's great. So you talked about they need to have an investment. What other costs or investments are associated with buying a home?
Well, we have the credit report, the appraisal fees, inspections if you want to, or we recommend you get an inspection. So those are some of your out-of-pocket costs in reference to purchasing a home. However, most lenders is going to want to see that the buyer has at least either 1%, 2%, or 3% invested into the transaction. Then you have your closing costs. And in the closing costs, you're going to have your prepaids, your homeowner's insurance, your property taxes, your interest. So you got lender fees, you got attorney fees. So these are all the costs that are associated with purchasing a home. So when we add all of that, that number can be a little frightening, but if you do your homework and partner yourself with a lender like Liberty Bank, you'll be able to tap into assistance depending on where you live in that can help you alleviate having such a large amount of money to bring to closing.
Yes. And that's important when you said partner with a good lender like Liberty, because it's important for you to come and just let us know what you have, what your situation is, and we will try to figure out what it is, how we can help you and get the deal done. Because we're not in the business to say no. We want to give you a loan.
Absolutely.
so we're going to figure out how to get it done.
Yeah. Give us the story so that we can figure out how can we position you to win? Because that's what we want to do. We want to be able to position you or put you in a position that you can purchase, you can win, you could have a home that you fall in love today, tomorrow, 10 years from now, 20 years from now, 30 years till you pay out from now. But every time you pull up to your house, you say, "Ooh, I like my house." And more than anything else, we want to ensure that your experience is also one that you can remember and that you can feel confident about and refer other customers to us.
Yes, definitely. So let's talk about loan types. What are the different kind of loan types that people can apply for?
Absolutely. So we have conventional and government loans, just to make it simple, correct? But it sounds simple. Oh, we got conventional loans and government loans. Yeah, but what are those, Prax? So government loans, we're going to have your traditional FHA. Mm-hmm. That's the sort of said to-go product that most people will call and say, "I want to buy a house and I want an FHA loan." Sometimes we don't really understand what it means, but just to give you a little background, FHA has very flexible underwriting guidelines, very flexible credit scores. It allows you to have some gap of employment, so to say, nothing major. But when it comes to helping you qualify for a loan, there's a lot of things that you are able to do with an FHA loans. Your required down payment is 3.5% of what you're buying. That required down payment can be covered by grant money, can be covered by a gift, can be covered for sometimes the lender may have funds themselves that can make available to you. So that will still consider your sources, correct? It allows you to get a gift. A family member can gift you your down payment as well as your closing costs. So it has very flexible guidelines. Another good one that people like with FHA, the seller. The seller can gift you up to 6% of the sales price towards your down payment. I'm sorry, not your down payment, but towards your closing costs. So there's a lot of things that a FHA loan brings that allow, regular consumers to consider that. Then we have, still under government, we have the VA, which is strictly for veterans. You have no down payment. It's veterans or the surviving spouse. So those two are there. Then we have the RD, rural development, correct? 0% down as long as you purchase in an area that is considered rural. So this is the government. And then we have conventionals. In the conventional loans, it's pretty much 3% or 5%. And that's where that myth came from, that you needed 20%. Because most of the time, many moons ago, that's what was offered. Our conventional loans were 20% down. And that's what most people wanted, because back then, the feeling of FHA was, it requires too much. The property needed to be in certain conditions, and we needed this and we needed that. So it was kind of easy just to slide and say, let's go in a conventional where it doesn't require too much. I have seen the evolution of times, and now FHA loans are as flexible as, sort of say, a conventional. It's always going to protect the buyer and the lender. So we are more inclined now, and people are getting more educated about loan types. And most people are saying, hey, I would like this. Income has increased in reference to FHA. You can make lots of money and still get an FHA. You could be a very high paid professional and still be able to qualify for that minimum 3.5% down.
And then, did you talk about USDA and
yes,
VA?
The USDA and the VA, those again, 0% down. These are still government loans. With both, your seller can provide you with up to that 6% in assistance. VA has, again, strictly for veterans, has one single ratio, which is from your gross income, 41% to accommodate your house note and all your debt. Again, you have to be a veteran. Has very flexible guidelines as well. And all these government loans, minimum credit scores. I'm not quite sure if you want to talk about that, but people always like to know, like, what's this credit score required for these loans? Okay, and I always tell, my lemma is work on your credit, guard your credit. Anything 640 or above, we good. If you can make it above, that's fine. There's products that you could get financed with less than 640, but then comes out the complications. With these credit less than 640s, when it's time for pricing your loan or evaluating what kind of rate you have, credit scores go hand in hand with the cost or the risk. So do your homework, prepare yourself. If you can't get to 800, that's fine. But if you could do 640 or above, you will be fine.
Okay. And then as far as the down payment assistance programs, can you use them for both government and conventional loans? Okay.
Yes.
Good. So as you see, it's not a one size fits all approach to mortgage loans. So we have a variety of options that you can choose from. You can, if you qualify for down payment assistance programs, and we'll kind of talk through what programs are currently available. That can help you as well. And then Liberty lends in
all 52 states. Correct.
And where we have, locations in 11 states, but we can lend anywhere in the country. So no matter where you are, we can help you. And so let's talk through some of the down payment assistance programs that's available that you may know of that's like real hot right now.
So just like you mentioned, Liberty Bank has we footprints or presence in 11 states, but we can lend in 52 states. And we are part of what is called a member bank through the Federal Home Bank of Dallas. And the Federal Home Bank of Dallas allows Liberty Bank to offer up to $20,000 for that could be used for down payment as well as closing costs for our buyers, correct? Now, if the property is located in one of these states that we are physically located, then the applicant, if qualified and needs up to, can get that up to $20,000. If the property is outside our footprints, then the person is entitled to 50% of that. There are income limitations on these monies as well, because we know there's nothing free in America. So there are going to be income limitations, but it's a good start. This money is there. So we've been part of the Federal Home Bank of Dallas. This particular year, Federal Home Bank of Dallas is dispersing monies in 4 rounds. We just ended round 1. Round 2 comes back out May 1st. As a bank, we have up to $850,000 for our customers. Wow. We did well. We used a lot in our first round, so we're looking forward for the round 2. It's a great product, so that's one that we can use across the border, correct? Then we break it down by states. We have another program that we could use. That we could use across the border is a down payment and closing cost assistance through. It's called Shenor Funds. And this particular program has assistance for low to moderate families as well for higher income families. So it's a great program. You could call us back and we could give you a little more details about this particular fund, but we could use it anywhere, 52 states. Wow. And it's not only for first-time buyers, it's not only for low to moderate, it's for anyone that wants to buy. And even if the income is not within the low to moderate, correct? Then that's what we have that we could kind of use outside of, and it's not specific to states. Then we have programs in Mississippi, we have programs in Illinois, we have programs as well in the state of Louisiana, and the combination of all these programs can allow a buyer to access anywhere between $55,000 or $60,000 that can be used in a combination of down payment and or closing costs. And those monies can also be combined with that up to 20.
I was going to ask, can they use the
yes.
across the board one and the state one together?
Yes.
Oh, that's
yes.
great.
So you could use the $20,000 up to 20 from the Federal Home Bank of Dallas, along with any of these other programs that I'm speaking about and combine. For example, I have used both the Federal Home Bank of Dallas along with a program that is exclusively for the Orleans Parish, $50,000, with 55. Oh, my math is not mathing today. $55,000 with the City of New Orleans, up to 55 for down payment, and then there's an additional 5 for closing costs. So then if we layer that up with that 20, now we're talking about close to what? $80,000 in down payment and closing cost assistance. So that's what we're doing. That's the kind of assistance and empowerment we are doing, helping a lot of customers that may have thought, this is not going to work for me. I would never be a homeowner. Well, we do. We have monies, we have assistance, and we're hoping to not only have that type of impact in Louisiana, but we are working to have that impact in other states as well.
Awesome. So let's do like a little lightning round game.
Yes.
So talk about, is this a myth or a fact?
Okay.
You need a perfect credit score to buy a home.
Myth.
And as we've already talked about, if you could get up to a 640, that's great, but we can look at and kind of work with you if you have mitigating factors.
Correct.
Is that still a thing, mitigating factors?
It's still a thing. Some of our programs, 620, and some of the conventional products as well as FHA. We have investors that could take, anywhere up to 600. But again, one of my past life was a credit counselor. So I'm always encouraging applicants to, don't go for the bare minimum. Let's work hard and get yourself into a very nice, workable score, because getting into a home, you want to ensure that you position yourself to be successful, not only because you want to buy it, but as you move forward, And if we're coming in with risks at the beginning, credit scores not as strong as we would like them to be, you know, it can eventually catch up with you, and now you feeling yourself, you create an additional stress that is not needed. So there's lots of tools, there's lots of agencies that we partner as well that can help you improve that credit and get yourself financed put yourself in a better position to be financed.
Cool. All right, the next one is myth or fact. Down payment assistance is only for first-time home buyers.
Myth too, because there is down payment assistance for those who even want to purchase a house for the second time. Yes.
Even, what about second homes?
I haven't seen much for second homes, but if you own a home and you're selling that house and you're buying another house, there's programs as long as you're first time buyer. But if you have a house and you're not selling that and you want to buy another house, then no. There's no down payment assistance for that.
Okay. Next one. Owning a home is always more expensive than renting.
Wow. You know, maybe 3 years ago, I will say no, because I'm speaking about where I live in Louisiana. You know, owning a home was always, you know, still the best thing. And you investing in yourself and you creating wealth for yourself and your heirs. Now we're facing high insurances, high prices, and rent and home ownership is becoming stressful.
Yeah.
You know, I've seen so many past customers and where owning a home hasn't become too much. It's not a joyful thing anymore because of the challenges we are having with insurances. But if I would have to pick, I will say it's always best to own than to rent, because you're investing in yourself, you're investing in your future than investing in somebody else's future.
That's right. And another question we were talking about earlier was the impact of the current changes or things happening on the federal level with like programs being cut and things like that. Is that impacting any of these down payment assistance programs or any of these things related to?
So up to today, 10/28, we haven't had any impact. You know, want to be stamped, you know, and we continue to pray that there will be little or no impact. I know at the beginning of this year, there was lots of rumors that affordable housing funding and Section 8 funding and a lot of fundings were going to be eliminated or cut off. But up to today, again, those assistance are still there. So we can just hope and do the work so that it continues to be available.
Okay, well, fingers crossed.
Yes.
It will stay.
Yes.
Okay, so for those listening that are trying to prepare themselves to purchase a house this year, what are the top 3 things they should be doing now to get ready?
Stop spending. Stop buying. Okay? Do your homework. And doing your homework means be selective with who you surround yourself and who you ask information from. Because everybody has a story, but it may not necessarily be a story that can empower you or help you position yourself to go where you want to go. So when I say do your homework, you know, find out the kind of products are available in the area that you want to live. Ask questions. Find out who are the experts in those areas. Okay. When I say limit your spending, it's, of course, if you want to buy a house, you want to be able to have funds of your own. Even though there's all this money available, we still want to see that when this house and you close on this house that you can still live. We don't want to close on the loan and then you only have $2 left in your bank account. And keep in mind, you still got to get the U-Haul, you got to buy new furniture, because we all wanted the new furniture, the new car, the new clothes. Exactly. So stop spending, you know, do your homework. And the other thing, you know, guard your credit. Guard that credit, because, you know, credit is going to be the determining factor for us to ensure that, yes, you are worthy, or you are credit worthy to pay us back. Okay.
Yep.
I got a long list. You gave me 3. That was a tough choice, because I also want to say, stay at your job. And then you may not like it, but stay at work, stay employed. No gap in employment. You know.
So can you share, is there a customer or success story that you can share without, like, you know, disclosing any like personal things, but can you share a story of somebody who may have been like on the fence, not sure if they could do this, and we successfully helped them?
Absolutely. So again, you keep giving me these limits. Okay,
There's many stories. I'm
there are
sure.
many stories. I'll pick one. So I had a customer close last December. Had been renting for a long time. Wasn't sure whether or not homeownership could be liable because of limited income. So we were able to find a home within her price. She very nicely bought a nice home, was able to receive pretty much all these assistance that I'm speaking about. And she does receive some assistance, and her mortgage is less than what she was paying in rent.
Wow, that's amazing.
Yes.
So as you can see, home ownership is possible. There's so many options. There's so many things that we have available to you. All you have to do is just kind of get out of your comfort zone and tell us what you want to do, what you're working with, and then we can figure out a way to help you. And even if, let's say you're not 100% ready, we can guide you and show you what you need to do to get ready. As you can see, there's a wealth of information, that you can tap into here at Liberty and with Prax. So if you have any questions, or even if you think you're ready now and want to sit down and talk to somebody, contact us. I'll put a QR code on the screen for you to scan. But I'll let Prax tell you how you can get in touch with her. And just do it. That's my motto for this year. Just do it. And, like Nike, and and see what happens. So how can people get in touch with you?
Absolutely. I just want to say thank you, Brooke, again for the opportunity to be here and share what we have available at Liberty Bank. You can reach me by phone, 504-240-5128. I believe that's my direct number. I don't call myself too much. But if it's not the correct number, email, that's pmalonzo@libertybank.net. And you could also go to Liberty Bank website and look for loan officers by region. I am in Louisiana, New Orleans market, and you could find me.
All right. And I'll put all of her contact information on the screen as well. Again, make sure you like, follow, and subscribe so you know when the next episode will drop. And that is all we have for you today. I feel like we could talk all day about this stuff,
Absolutely.
But we gotta, wrap it up. So thank you for tuning in, and we'll see you next time on Let's Get Financially Fit.